When reviewing charts, how far to the left should you go? Elizabeth, that's a fantastic question. I'm really glad you just asked it because a lot of people do this incorrectly. When you're looking on a chart and you're looking back left, that's what we always say, right? When you're looking at a chart, look left to identify support and resistance. Now, listen to me very carefully, and then I'll explain it. You go back as far left as you have to until you find relevant levels. Now, what does that mean? That means that as I'm sitting here and we're looking at the SPY, for example, and we look at where we are right now, we're going to look back to the left to identify levels that are relevant to us. Now, I can identify right away one level that is significant, and that's going to be a support level that was previously a level of resistance. And then you have this gap up. So you had the big gap up from yesterday, and then there is your gap fill. So that's why that's one level of support. I don't have to go much further back to identify one of those levels. And then when you look for resistance, you'll identify a resistance level that you can clearly see from right here, okay, which is going to be this level of resistance, right? That was previously a level of support when we made new all-time highs, and then was resistance all the way back here. So that's clearly going to be a level of resistance for us. So you see how I'm able to look back to the left and identify those levels. What you do not need to now do is continue looking left until you find levels that are no longer relevant. Okay, so the mistake that a lot of people make is that now with the SPY, it's a little bit maybe not the best example because of how close we are to all-time highs. But if we look back to the left, one could say, because you can say to yourself, you're like, oh, look, there was a level of resistance, right? There was a high. So someone might incorrectly go and draw a line across this level. And they're going to say, okay, that's going to be a support level right there at 453. And you have this line on your screen. That line is no longer relevant. You don't have to continue going back that far to the left because this level was broken many times and the market has traded through that level many times. So that level is no longer necessarily relevant. The mistake that a lot of people make is they pull up a chart of, I don't know, like I'm trying to think of just an example that maybe that we can have on here that, I don't know a stock that can't think of one, just right off the top of my head for us to really look at, but I can't think of one just right at the top of my head. But the point that I'm making is a lot of people will go back to the left for a year, 2 years, 5 years, 7 years. You only have to go that far back left until you find a level that's relevant to the current price action. You have to understand what support and resistance are. The only significance of support and resistance price levels is like when you find a resistance level, all that is an area where there's a lot of sell orders on a particular stock. More sell orders than there are buy orders at that area for whatever the reason at that point in time. Once those levels are broken, okay, and they are traded through now, like they're not there, you don't need to now consider that still a level. But inexperienced traders will plot every single high and low they see on a chart for the last 5 years. They end up having 35 lines on their screen, and literally their chart will look like this. If your chart looks like this, you are doing support and resistance levels wrong because there are not that many relevant support and resistance levels on a stock. Now, if you go back over 7 years, yeah, maybe there are at that point, but those levels are broken. They're no longer relevant. The price is only relevant at that point in time. I hope that makes sense, Elizabeth. I hope that I'm explaining that in a way that you're able to understand. I wish I was able to know this question ahead of time so I can find an example, but I'd have to go through charts to find an example of exactly what I'm talking about. But once you find the levels that are relevant to the current price, stop and focus. You should only have 3 to 5 levels. You have more than that, you're plotting too many levels that are no longer relevant.